Hey, what's up you guys? This is Junior Trader, and in this video we are taking a look at Nvidia, AMD, SMCI, ARM, Broadcom, and Micron, and then SPY and QQQ as well. So what's going on in the market in the morning here, right? So let's talk about all of that. And also before that, please note none of this is any financial advice and it's only for education purposes. So we were talking about this pivot, potential pivot from here, and if Nvidia continues to can stay above now 102 and 59 cents area or 50 cents area, there's a likelihood that this is where a continuation to the upside can happen for Nvidia. Now, how to read this red candle right now, because we are not seeing a continuation to the upside at the moment, right? That's fine, and we see that's why it's $106. That's the next level, is also where the pivot is still right now. Today it's rejecting. So this zone between 102 and 106, I would suggest, is a zone that will decide it right now. If we stay above 102 and 50 cents area and continue closes above it, we have a potential that if we can get above 106 eventually, the upside can continue, because we still have a pivot here, guys, with us. All right, we haven't lost the pivot. And if I take you to the 4 hours interval, let's actually do that. So if I take you to the 4 hours interval here, you can see that we are still holding a pivot here. This is clear on the hourly interval, so I just chose 4 hours so that I can show you in the consolidated form here. So let's go to the hourly interval and let's see intraday how things are looking like. So some bounce is coming at that 50 hours moving average, and you can see that reaction is also happening below 200 hours moving average. That's fine. It's expected, because we are still technically haven't taken out, though we have taken out these pivots. Yes, that's a great win at about $102, right? That's a great win already, and now it's all about holding above these pivots, and we are just rejecting below the other pivot, because this, and we are below 200 hours moving average, we are below 20 days moving average. So there's an energy that Nvidia will have to spend to make itself in the full uptrend. Right now it's trying to change the structure back again to the upside, so all these pullback rejections are meant to happen at these levels. Now this is the funnel test. Again, if we lose 102, if we even lose 50 hours moving average now, and we then eventually start to lose 102 and lose it is closes below it, consider it a problem, right? Otherwise, yeah, we'll have to see if we just hold this or even continue to hold this 20 and 50 as how the reaction is coming right now. There is a chance that we may, then eventually we'll have to break 106 and then eventually 200 as well for the more strength on the upside. But so that's that. I'm still in the the play area here with Nvidia, that it's not fully bearish and it's trying to become bullish, but it's not there yet as well. At least for intraday right now, you can see it's choppy and range bound and going sideways. This is a strong zone it's trying to hold. Let's see if it holds or not, and unfortunately if it doesn't, then definitely there's a $102 problem, right? So definitely even on the intraday, I would say Nvidia will have to do some more structural changes. We are already below 200 moving average on 5 minutes as well, below 20 and 50. So there is some structural upside that Nvidia will have to spend some energy towards right now. Yeah. All right, $102. It's a sideways action today, and $102 is the last line of defense in this, potentially a continuation into this structure change to bullish, holding these pivots. And yeah, let's see if Nvidia can do that today, hold it, and if it doesn't, well, there's your answer. We are still then in some weakness, and then we will, I'll talk about later as well, but then we are again watching if it's, again, it all comes down to, right, this pivot needs to hold, and the confirmation, better confirmation for that is staying above 102, because we have already taken out previous pivots. Yes, it's the next pivot area we are rejecting right now at, because for the reasons also, as I said, we are below 20 days moving average, we're below 200 hours moving average, and all of that, and there's an energy that's going to be spent to get out of it. All right, AMD. AMD. So as we talked about yesterday, this is the area, right? If AMD can continue to go above 136 and 82 cents, the rebound can continue to 20 days moving average. Seems like it's rejecting across. That's still the same area of 136, and that's fine. It's rebounds are always tough to trade, or pullbacks are tough to trade in that direction because that's against the direction. And since we're against the direction, we are below 20 days moving average. 136 is not recaptured to the upside, and yeah, we are seeing that in the price action struggle. Going to the hourly interval, and you can see precisely still below 200 hours moving average. Now it's all about if AMD can continue to hold one of these levels, and even this level, 130, and then finally comes back up and gets above 200 hours moving average. That's a beautiful sign. Right now, it's not able to do that, but we'll see how by the time market closes or end of the day, how the things are looking like with AMD. SMCI, I have already been saying this is still very weak and can continue to stay weak as long as we're below 530. I'm not surprised that it's just going, sideways and red bit of a red candle. It's not even a strong price action, at least at the moment. That tells me that it's consolidation. No, it's just almost a dead cat bounce right now. I would consider that. It's just not strong, guys, right now. ARM, all right. So ARM finally trying to do that, getting above that blue box, right? Let's see if it can do that. This is the consolidation. As I said, if any position is taken through the consolidation with the previous day's green candle, stop loss can be on the other side, and then it's all just about playing it, right? And this is the confirmed zone, though. If we can get above 100, this 121 to 119 area, the blue box pretty much out of it, you can expect 20 days moving average retest, right? So that's something to watch, at least. So and yeah. And yeah, for the some a little bit of that range on the rebound side. Otherwise, it's also just a waiting game until 200 hours moving average catches up. You are waiting, holding. If even if ARM can stay above this level 115 and 52 cents today, staying above these previous pivot zones, that's also a good win for the day. All right, in the overall structure, as if it's going to turn upside. Broadcom, all right. So Broadcom, I already talked about that. Intraday, if we can, well, above this blue box, 143 area zone, 144 area zone, above this will stay bullish. We are staying above that. Again, similarly, Broadcom will need to spend energy getting out of this lower trend line, 20 days moving average and all of that. And let's see on hourly interval what is happening there. And yep, it's testing that 200 hours moving average underneath of that. Same principle applies, guys. And if Broadcom can still stay above 144 and gets out above all of it, trend line 200 hours moving average, this thing can shoot up. And also above that, yeah, eventually 20 days moving average as well. So this is the next level you can be watching. 150 and above can give it some more bounce to the upside for Broadcom. Otherwise, for the levels to the downside, that blue box that I showed you on Broadcom, that's the breakage level. All right. Micron seems like at this point, if it continues to go above 93 and 51 cents, that rebound that we talked a possibility of until 200 days moving average is possible. So let's see if it continues to do that. Again, stop loss is on the other side with these consolidation. Anyways, I'm not too confident even in this rebound, so I'm just providing you the structure. And if you feel like trading with the stop loss on the other side, it's your choice. But I'm not too confident for myself, and I'm not trading this rebound, just so you know. And yeah, but because this chart is still so weak that I would not want to touch it on the upside as long as we are below 200 days moving average. I would like to take another shot when it comes back to 20 and 200 days moving average, right? Into a potential pull downside again with the stop loss on the other side. I'll talk about it if I do that. We'll have to see the price action once it gets there. But right now, I'm just not too confident in this rebound. Or if it starts to falter here, then that will be it, right? Then we'll have to see the price action just from here itself for that. All right, let's take a look at SPY and QQQ. All right, so SPY, even though we are seems like in the recovery mode and we have gotten above that structural area of 524.78 cents, it's a good sign. It's still a good sign for SPY. Now it all comes down to can it hold 524.61 cents? If any time it loses it, and looks like by the time market may end today, it seems like the gas is coming out of the engine or the rocket. Yeah, like it's losing its steam. That's what I'm trying to say, right? And it's below 200 hours moving average as well, right? All right, even if, again, if it today loses this pivot 528 area and 20 hours moving average, yes, it's going to come lower. But for the intraday, but 524 still remains the level to watch for the overall structure. And if we start to lose that 2050, 524, we again have a problem with SPY. Just keep that in mind. Until then, yeah, let's see if this turns into a rebound recovery or whatnot. But yeah, until then, we'll have to stay with this above 524.79 cents. We do have a hope. For the day, it's looking weak, but until 524, this area, the red line with the significant level mark behind it, is still hopeful for the SPY. QQQ, it's still rejecting below that 448 and 75 cent zone. The previous structural area broke below it, still rejecting it. So the worry is not, out completely. We are not out of the woods yet of potential big head and shoulder here, and which will be confirmed once we break below this 200 days moving average, and that will be a problem, then bigger problem. It's important that we start to not break, we don't break below 200 days moving average, starts to get above 440 as a bull, right? Anything on the bear side, just reverse what I'm saying, right? That's for bears. So yeah, bears don't want to see it get above 448 and break finally below 200 days moving average. Is the next big breakdown. All these plays on the downside I already provided, right? Technically, we are still in the downward structure. This is the structural area. If it rejects here, you can expect another leg down, and which could be with the 442 and 80 cents. But as I showed you yesterday as well, and guys, as I said, we'll have to spend more energy because we are trying to change the structure. On 4 hours, QQQ is still holding a pivot here. And as long as, even if we can stay above 442 and 95 cents here and make our way higher, that's still a next pivot, higher low, right? So that's this 443. So it all comes down to, can it get above 200 hours moving average? May not happen today, and we have these two hanging pivots here. May not happen today, but we are still not out of the woods yet, that area, right? We are still rejecting below that. So yeah, this is the final test for QQQ, if it gets above or not. All right, guys, that's it for this video, and I'll see you in my next videos. Tesla is a little bit red as well, but yeah, I'll talk about that later today. All right, I'll see you in my next videos, guys. Take care. Bye.